Which investment platform truly reigns supreme for your financial goals? M1 Finance, Betterment, or Wealthfront? Are you a hands-on investor who thrives on customization, or do you prefer a set-it-and-forget-it approach with expert guidance? Perhaps you're somewhere in between, seeking a blend of automation and control. In today's digital age, the landscape of investing has been democratized like never before. Gone are the days when sophisticated investment strategies were exclusively the domain of the ultra-wealthy. Robo-advisors and innovative investment platforms have emerged, making diversified portfolios and automated investing accessible to virtually everyone. This is fantastic news for anyone looking to grow their wealth, but it also presents a new challenge. With so many excellent options available, how do you choose the right one for you? That's precisely what we're tackling today. We're diving deep into three of the most popular and highly regarded platforms in the investment space: M1 Finance, Betterment, and Wealthfront. Each offers a unique philosophy and set of features, catering to different types of investors. By the end of this video, you'll have a clear understanding of their strengths, weaknesses, and who they're best suited for, empowering you to make an informed decision about where to put your hard-earned money. Let's start by setting the stage. What exactly are these platforms? Betterment and Wealthfront are widely considered pioneers in the robo-advisor space. They essentially automate your investing by building and managing diversified portfolios of exchange-traded funds, ETFs, based on your risk tolerance and financial goals. Think of them as your digital financial advisor, handling everything from asset allocation to rebalancing and even tax loss harvesting. They are designed for a more hands-off, automated experience. M1 Finance, on the other hand, is a bit of a hybrid. While it offers automation similar to a robo-advisor, it also provides a significant degree of control and customization. Instead of pre-built portfolios, you create pies, essentially custom portfolios made up of individual stocks and ETFs. And M1 Finance automates the investing and rebalancing according to your chosen allocations. It's for those who want automation but also desire a more personal touch and control over their investments. Now that we have a basic understanding, let's break down each platform across several key categories. Fees, the cost of investing. When it comes to investing, fees can eat into your returns over time, so understanding them is crucial. Betterment charges a management fee based on a percentage of your assets under management, AUM. For their digital plan, it's typically 0.25% annually for balances over $20,000 or with recurring monthly deposits of $250 or more. If your balance is under that threshold, it's a flat $4 per month. They also offer a premium plan for larger accounts, typically $100,000 and up, which comes with a higher fee, around 0.4% annually, but includes access to certified financial planners. Keep in mind that the underlying ETFs in Betterment's portfolios also have their own expense ratios, which are separate from Betterment's management fee. These are generally low, often ranging from 0.05% to 0.24%. Wealthfront also follows a similar AUM-based fee structure. Their standard advisory fee is 0.25% annually for all taxable accounts, regardless of balance size. Like Betterment, you'll also pay the expense ratios of the underlying ETFs, which average around 0.08%. Wealthfront does not offer human financial advisors as part of its standard plan, so there's no higher tier for that. M1 Finance stands out significantly in the fee department. For its core investing platform, M1 Finance charges no management fees. That's right, it's free to manage your investment portfolio. You'll still be responsible for the expense ratios of the ETFs you choose to invest in, but M1 itself doesn't take a cut. They do offer an M1 Plus membership for $36 per year, which unlocks additional features like a lower interest rate on their borrowing feature and a higher APY on their cash account. For investors primarily focused on simply building and managing their portfolio, the free tier is incredibly compelling. Verdict on fees: M1 Finance is the clear winner here for fee-conscious investors, offering a truly free core investment platform. Betterment and Wealthfront's 0.25% AUM fee is still very competitive within the robo-advisor space, but M1's zero management fee is hard to beat. Investment philosophy and customization. This is where the platforms truly diverge, catering to different investor preferences. Betterment takes a highly automated, diversified approach. When you sign up, you complete a questionnaire about your financial goals, risk tolerance, and time horizon. Based on your answers, Betterment constructs a globally diversified portfolio of ETFs across various asset classes, including U.S. stocks, international stocks, emerging market stocks, U.S. bonds, international bonds, and more. They offer different portfolio strategies, including a core portfolio, socially responsible investing, SRI, portfolios, and even some crypto portfolios. Betterment also automatically rebalances your portfolio when it deviates from its target allocation and employs tax loss harvesting to optimize your tax efficiency. You have some flexibility to adjust your risk level for different goals, but the underlying portfolio construction is managed by Betterment. Wealthfront operates similarly to Betterment in its automated, diversified approach. They also use a questionnaire to determine your risk tolerance and build a portfolio of low-cost ETFs. Wealthfront is known for its sophisticated tax loss harvesting capabilities, including daily tax loss harvesting and even direct indexing for larger accounts, typically $100,000 plus, which involves buying individual stocks instead of an S&P 500 ETF to maximize tax loss harvesting opportunities. Wealthfront's portfolios generally consist of 6 to 8 ETF asset classes. While it's highly automated, Wealthfront also offers a path financial planning tool, which helps you project your financial future and plan for various goals. Like Betterment, the core investment strategy is managed by Wealthfront. M1 Finance is where customization truly shines. Instead of pre-built portfolios, you build your own pies. A pie is simply a collection of investments, individual stocks, ETFs, or even other M1 pies that you allocate a specific percentage to. For example, you could create a pie with 50% VOO, S&P 500 ETF, 30% QQQ, NASDAQ 100 ETF, and 20% a specific tech stock you believe in. When you deposit money into your M1 account, it automatically invests that money into your pie according to your set percentages. If any of your investments drift from the target allocation, M1 Finance will automatically rebalance your portfolio as new money is deposited or withdrawn. M1 also offers expert pies, pre-built portfolios designed by M1's team, if you prefer a more hands-off approach but still want the M1 platform. This blend of DIY control with automated execution is what sets M1 apart. With that said, thanks for watching and until next time.